Good morning and welcome to the Homestead CPA. My name's Dan Snyder. Today we're going to be starting part 4 on our 15-part series on accounting, tax, and legal issues for homesteaders. Today we're talking about hobby losses. And I welcome you for those of you who've been here before, and if you haven't been here before, welcome for the first time. Now, you can go back and watch the previous videos in the series if you'd like. Each of these videos is going to be independent. They're not required that you have watched the previous videos. And over time, you can just pick and choose which ones sound to be of interest to you. So today, we're going to talk about something that is challenging for many homesteaders and applies to many homesteaders, and that's what's called the hobby loss rules. So let's start at the beginning. Any U.S. tax resident has to report and potentially pay tax on any income they make, wherever they make it. So if I sell some eggs for $6, then I should be reporting that $6 sale on my tax return. Now, if I have income, I'm normally entitled to deduct expenses incurred in generating that income, but the question becomes, which expenses can I deduct, and in what situations can I deduct them? And this is where the hobby loss rules come into play. So what is a hobby, and what is the IRS trying to achieve with this? Well, the reason that they're concerned is that if I'm in a trader business and I make a profit, and they want to make sure I'm paying the proper amount of tax. But if I have a year in which I have a loss and I'm an individual, that loss from that activity can reduce income from my other activities. So if I do this part-time and I have a job and I have wages, that means that the loss from my homesteading activities could offset my wages income, which means I would pay less tax. And that is a legitimate working of the Internal Revenue Tax Code, unless I'm in this as a hobby and not with the intention of making a profit. So let's talk about how the IRS defines a hobby. If you have a financial activity and you do not show a profit in that activity in 2 out of 5 years, then the IRS considers that to be a hobby. Now, there are certain exceptions. So, for example, if you have a nut farm, you have a pecan grove. Well, pecan trees take about 10 years before they can produce. Fruit trees, similar thing. So there are some exceptions to this general hobby loss rule. But assuming you're not in one of those industries, then you're going to be subject to these rules. And the effect of that means that if the IRS is successful in saying that you're not in this for a trader business, then A, you have to report all of your income, and B, under the rules as changed in 2017, you no longer get a tax deduction for any of the expenses that you incurred in creating that income. So it is a much more important issue now. It used to be you could take a tax deduction as an itemized deduction, but you can't even do that any longer. Now, this rule will change in 2025 if the next Congress doesn't decide that they want to continue that limitation. So that's up to them. But for right now, it will go back to the way it was before unless there's some change made. But even then, assuming you could take a tax deduction as an itemized deduction, because of the increase in the itemized deduction, effectively you may not get a deduction. In other words, the amount of deductions won't be over what's called the standard deduction, and therefore it's as if you didn't get a tax deduction for it. So this is an important rule. So in determining whether you are in a trader business or in a hobby, as I said, the IRS has created a safe harbor. That is a presumption. It is a rebuttable presumption, and many of our clients can successfully rebut that presumption. So what does it take to be in a trader business? Now, think about it outside of your homesteading context. Let's say that you decided you were going to open up a new restaurant. Well, what do people do when they normally start a any new business? Well, I might consider having a business plan. I might consider, what are my staffing needs? How much capital am I going to need to start this business? Who are my customers going to be? How am I going to sell my food? How am I going to advertise? And you might write all that down from a business perspective. So if you have an activity that you're doing on your homestead, that's the first thing that you're going to want to do is you want a business plan. You're saying you're in this to make a profit. How am I going to do that? And generally you can create budgets that show that, yes, I have the intention of making a profit. The IRS actually has a 9-part test that they use to determine, outside of the scope of the safe harbor, whether or not they think you're in a trade or business. So, do you carry out your business in a business-like manner? Is it haphazard, slapshot, or do you do it regularly? Do you have, are you an expert in the field? Do you have some sort of study, some education in this field? Do you have, are you putting in enough time to be successful in this? I've got one client who's got 9 different active businesses, and it is difficult for him to put time into all 9 of those businesses. And what happens is he puts the time into each business that it needs at that moment. So he's basically running from one fire to the next, but it works for him. Are the appreciable assets, anything being created? So if you're a homesteader and you start with, let's say you want to raise a beef herd, and all you can afford to buy is 4. So I buy my 4 cows, and I rent a bull or I do AI, and next year hopefully I have 2 steers and 2 heifers. I keep my 2 heifers, I sell my 2 steers, I rent my bull, I get my AI, and the next year I've got more, and I'm growing this herd. So I started with a certain dollar amount of assets. Now over time I have more. That is me making a profit. I haven't realized it. I haven't sold anything other than maybe the steers, but by selling the steers, it is allowing me to pay for the food to grow my herd. So that is a profitable enterprise. I am creating an asset. Let's say that I need water for those animals, and I dam up a river and I create a water tank or some other facility to water the animals. I may plant grass. All of these things, in addition to supporting my business, may increase the value of the property. I may plant some trees to give them shade. When you're selling property, people like trees, people like water. So arguably, you are increasing the value of the land. You are making a profit. So these are the things that they look for. Are there successes in other business? Are you the first person to do whatever it is that you're doing? If not, can you show how your business is similar to other businesses? In other words, are you a cow-calf operation and you can compare yourself to other cow-calf operations? Are you a feeder operation? Every year you buy weanlings, you got a bunch of grass, you feed them out, you sell them in the winter so that they go on to the feed houses and the processing houses then. If you can show that you're doing things in a similar manner to others, that's a good business. What's the history, the overall history? This gets back to we want to see profits in 2 out of 5 years, which is fine, but there's not actually a requirement that you do that unless you're trying to obtain their safe harbor status. Is the activity stable financially? That doesn't mean that you may not have to keep putting money in it, but why are you doing that? Are you doing it because otherwise it would fail, or are you doing it because you're continuing to grow the business? My wife and I started our first property. We bought 2 cows with calves on the ground that had been bred back. We ended up selling that property about 4 years later, and while we had sold many of the steers, we ended up selling a small herd of about 27 animals. So yes, we didn't make a profit in years 2, 3, and 4, but in year 5, we made a large profit. So we could show that, yes, in fact, we are in this with the intention of making a profit, and it was financially viable. And then finally, the area that gives most people problem is, are you doing this commercially, or are you doing this for personal activity? You get pleasure out of this. Now, I have a lot of clients who are in the horse industry. Some of them, honestly, this is a business. I have a number of horse trainers. I've got farriers. I've got insurance agents. All of these people are making money in the horse industry. Then I have the people that show horses, and they have their brand new truck every year and their brand new trailer every year, and they take their one horse because all of their friends are going to the shows, and they maybe win $1,000 a year showing their horses, and oh, look, aren't I doing this for fun in a business? No, they're not really trying to make a profit. They haven't been able to show that they have the one horse, and they're really doing it for fun. Now, I don't know about you, but I really don't know anybody who rides cows for fun or rides pigs for fun. Now, arguably, my wife has chickens for fun because she's an adherent to chicken math, and she enjoys it. But if doesn't mean you can't have fun. It just means, is that one of the reasons that you're doing for it? So these 9 factors that the IRS have are informative, but they're not determinatives. But if you can't meet their safe harbor test, you have to be prepared. And that means you need to have written business plans, you need to have documents, you need to have proof that you're doing this to enter into this activity with the intention of making a profit. The IRS cannot force you to make a profit in any one given year. We actually had a client that went 14 years, never showed a profit. The IRS argued that, in fact, he was doing this as a hobby. We went to court, and we were able to show that over that 14-year period, the client went from he bought some land for $400 an acre, which was now worth $4,000 an acre. He had 5 cows that he rounded up on the property that nobody knew were even there. At this point in time, he had a breed-specific herd of 327 cows, and on paper, he was worth about $6 million more than he was when he started. And when we told him on the stand that the IRS thought he was doing this for fun, and believe me, we asked him to watch his language, his reply was, well, then they're stupid. And in fact, over that 14-year period, he had created wealth, created assets of about $6 million. Now, and then he turned to the judge and he goes, I didn't know they could make me sell something, which of course they can't. And that was the end of the case, and the IRS lost that case. But we had documentations. We had entire history of the herd. We had every animal that ever been born, died, sold, bought. And by the time this gentleman had gotten to this court case, his cast-offs were being sold for $3,500 for a cow. They were that good. So we were prepared to show that, yes, indeed, he was doing this as a business. He was doing this with the intention of making a profit. He just wasn't intending to make profit that particular year. So that is an example of being prepared if you can't meet the hobby loss rules. So just because you don't have a profit in 2 out of 5 years doesn't mean that you aren't doing what you're doing with the intention of making a profit. It just means you may have to prove it. Now, for homesteaders, you've got the additional factor of you may be involved in 3 or 4 different activities that you're trying to make a profit. And just like my client that had the 9 different businesses, you're going to have to show that you've got a plan for each one of those and show that each one of them, they don't necessarily have to stand on their own, but as a group, you have the intention of making a profit. In this day and age, many of you may also have sort of a non-traditional source of making money, which is you're going to live stream your activities on the internet, and you're going to expect and generate a profit stream from that. You could not make that YouTube profit stream if you didn't have the content that you were selling. So all of this is a long-winded but sadly complicated issue of how do I make sure that what I'm doing in a way that I can take profits and losses appropriately and potentially avoid the hobby loss rules. To get the best result, you want to work with your tax advisor and keep him informed. And remember, even Jesus paid taxes.